Or if you're looking for long, you can wait for the price to come back here, use as support, and go long. And now where are we in the price? So this looks to me, this pump here, you were all able to catch it, right? Easily. But where are we right now in price? So this brings us slightly back to what happened yesterday. So if I take my Fibonacci from the high to the low, right now, price is at an equilibrium, right? So I told you guys, if the price, oh, let me just turn this off. It's better if I just do it opposite so you can see the premium to discount. Right now, price came back up to the 0.5 area. So now here is an area, some people I knew wanted to long much more, but I told them, okay, we're coming back to the equilibrium. So here is why I'm saying I don't want to take a trade in the morning, because it's in an area where it's fair for both sellers and buyers. So until we get out of this area, and that's why I'm saying PM session, because it would already be, the direction would already be consolidified, we most likely will be have a clearer idea. But right now it's right here. So while we cannot do anything here, what we can do is go over yesterday trades. All right, so yesterday's explanation, and it's going to lead back up to here. So it's very important that you understand what happened yesterday, so to be able to catch this whole move. All right, so second. Don't worry about missing about any move. Don't worry, it's only gonna hurt you. All right. So, but before we go into yesterday, do you remember what I told you guys? From the high to the low, I'm gonna go on the one and show you. From the standard deviations, once it comes back to 2 to 2.5 and show immediate rejection, it's gonna come back to the equilibrium of the range. And you just saw it that it came back to 50%. So the objective of the market is hit right now for the AM session, in my own humble opinion. And then we're gonna be tape reading. But right, so what happened yesterday, guys? Yesterday, beautifully, we had a couple of opportunities. We had an easy short on the morning, very simple short, and nobody has any problem with that. So what did we do? In London, market went up, it swept previous session high, very nice. So now we're looking for shorts or longs, we're looking for shorts. We turn on our shorts indicator on, LuxAlgo price action concepts, very nice indicator. If you don't have it, please do. Step one, we took that high, that was step one. Step two, chosh. Do we have a chosh? Yes, we do. A few minutes later, we got a beautiful chosh right there. Step three, do you have any FEG? Yes, we do. We have one here. So this is where you will enter. However, always keep in mind, as I always teach, if you have another FEG, you must allow your stop loss to, you must be able to wither a price coming back to this FEG, because this also attracts the price, right? So our stop loss, either way, is going to be at the highs. But any other case, you must be able to take into account this FEG and this FEG, right? So we took our entry here. Let's say you entered on this candle here. Since the price came back to it, oops, you came back onto this area here, put stop loss at the high, and you target in previous session low, which is 1.7, right? It's not two, but I mean, it's not too bad either, right? So it's about 1.7. I always recommend 2, but for people who entered late, like me, I entered late. I woke up late, so I entered on this FEG. It was around 2.87, but I didn't check out here. Otherwise, I wouldn't have taken the trade. But right here on this FEG would have gave you 3.5 RR. On here, it gave you about 1.45, etc. But it doesn't matter what I'm trying to explain here. What I'm trying to explain is we took a short here. Instantly, as soon as we took an entry, a few candles later, the price immediately was very efficient to go down. You can see all this consolidation, people getting hurt, we didn't care about it. Once we get in, a few minutes later, the price is already efficient because the market, the algorithm took its liquidity, it took its fuel. Second step, it showed us signs that it wants to reverse that. And that is market terms change of character, right? So it's just hinting, tipping its toes to us. And step 3, FEG to support us in the price, all right? So that was a beautiful trade. And how much further did it go down? You can see how much more it went down, right? And this is not random. The price when it drops, it's not random. I can show you exactly where it dropped to. So we also called it live. What do we do? This is the high that manipulated this high. This is the high that manipulate this high. So this is where we anchor our Fibonacci to find the standard deviation. We put it at the swing low. And what do you guys notice here? Price will always reject at 2.5. If it doesn't, it's gonna go back to 4. What did it do here? Let's zoom out a bit. Let's draw a rectangle just for the sake of this. All right. Price came back all the way to 2.5 and chilled here. This is an algorithmic sweet spot. Okay, this is, nobody looks at this, but this is where the algorithm already prices to. The prices would probably want to come back here. Is there anything important at 2.5? Alone, it's not that enough. Alone, actually, it's good, but it's always better if we have any other confluence with it. Well, you can look on the left, we have swing low, equal lows, and this low as well, right? So this here is very important area. This 2.5 just became overzealously stronger, right? So very attractive. And you can see the price, it took almost the whole morning to come back up to here, but it took around maybe, I don't know, 30 minutes to come back in like few candles, one candle, one. Ignore them, these ones, these are just retracements. To do there. What did it do here? Did it show immediate rebouncing? No. If we see immediate reaction, like a displacement up, then we'll most likely come back to the midpoint of this range, right? Somewhere like this. But it didn't. To this area here. But it didn't. It just chilled there. All right? So this is why we don't touch it. Came back here, chill. Went down to sweep these liquidities. Maybe this lows us there. Went back up. And now we had displacement up. And you can see it went all the way up back to here. So what do you see here? We swept now previous session low. This is where it gets interesting. We have a sweep of previous session low. And now we go looking for longs. We turn on our longs indicator. We got a chosh. Very nice. Very nice. However, what's the problem here, guys? Nobody was able, we were seeing this live, but nobody were able to take a trade because we have FEGs. We have one. Let me just remove this. Or let's keep it. We have this FEG here. We have this FEG here. But price never came back to it. It just rallied all the way up, right? And I'm going to show you how you can utilize this, how you can actually take a trade here. But we took an easy trade on YM, right? So we're going to go over that in a minute using the 6-6 sister concept, which is very nice. It's ICT concept. But where do you think the price went? Low. Again, 2 to 2.5 area. Oh, what did I do? God damn, where's my chart? Sorry about that, guys. Huh? Wait. If I do this. All right, there we go. It should give me, it should take me out. No. I don't know which thing I was using. I think it was here. All right, okay. So we were here. Excellent. So where do you think the price went to? 2 to 2.5 area. It chilled here. You might be looking for long to end the session at London high, your TP, maximum TP, but you can go to 2 to 2.5. This area here, anyway, is good to close your whole position. You see the price came back here, went up, false rally to sweep these highs, and then crash all the way down. Where do you guys think the price went down? All right, again. And I'm not choosing random areas where I put my Fibonacci. I'm going to be explaining to you, but it's the manipulated move, right? We're projecting, right? You can also do it like this. It's the same exact thing. The reason I was using this is because during our time of the trade, we were not here. We were right here. Oops. We didn't have a swing high, right? We didn't have a swing high. So I'm using the latest one, that one. Now, we got step one sale. We can go ahead and check it out in a second. But now, what do you see? This big move here, I'll show you how you could be able to catch it and where it went. And I gave a task to people. I gave tasks to people in the sweep channel. I told them, where do you think the price is going? Don't react on it. Don't anticipate. Just tell me where the price is going to close, right? So let me just go ahead and close this. While we're right here. All right, I'm going to go on the 15-minute. Close this. remove everything on the chart. Take this from the high. This is the high. This is the high that was manipulated. Put it at the low. And there you go. Came back straight to R. You went back down, immediate rebalance back. Now, immediate rejection back up. Where do we go? We go to the midpoint of the range. So it's algorithmic. It happens every single day, guys. You don't have to wait for choice. You don't have to wait anything. As soon as you see immediate reaction back, you can take a long. I don't know. You can use any FVG. You can take a choice, FVG, blah blah blah, and aim for 0.5, which is literally the midpoint of this range. And I just showed you guys yesterday and today, it was the exact same thing. So we can back straight to 0.5, and we're chilling here, right? So everybody that's trying to long on this big movement, I told you, don't take a trade. You trade only ICT. Yep, only ICT. So I told you here, don't take a trade. People here think, oh, this is a big movement, oh, big displacement up, oh, big candle, FVG, we should take long. Well, now all of them are hating themselves, right? We're just chilling, right? We're learning stuff, because next time it happens, which is probably tomorrow, right? It happens every day. You can work on it, right? So you can see now we're chilling here. We also have this big FVG right here. This FVG here, which FVG do we look for? Well, always look at the narrative or context. And now I promise many people don't understand what narrative means, right? It's easy to say, but it's hard to explain. Narrative, and I want you to all write this down. Narrative is one thing. Narrative is one thing, okay? It's one correct definition in the market. Write this all down. The narrative means what does the algorithm want to do? That's three questions. What does the algorithm want to do? Why does it want to do it? And how it's going to do it? All right? That is narrative. This FVG here is an insufficiency. The market does three things. Remember, the market does three things. One, I'm going to write it down every single lesson. Market will rebalance to equilibrium. Two, rebalance imbalances. Or FVGs or insufficiency. They're all the same thing, okay? I'm just going to delete this and keep it as imbalances. Three, hunt liquidity, okay? Why did I choose this FVG, not this FVG or this one? Because this FVG here, let me remove this and just make it. This midpoint, this orange line, is the equilibrium of this range. This FVG is an imbalance. This line here is equilibrium. This high here is liquidity. So the algorithm did what it has to do. It done its objective for today. I think for the AM session we did its objective. Whatever it does next, I don't care. But the algorithm does three things. This is the narrative. This FVG, what's the algorithm gonna do? Well, it's gonna go to all the way back to equilibrium, right? It has to go back to equilibrium, and it has to finish the imbalances. That's the what. How is it gonna do it? Well, it's by using. We are here at price and time, right? Price and time is always important. We are the 2.5 ST standard deviation area, which is a very algorithmic reference point, right? These are all reference points. They're not supply and demand. They're not rectangle. They're not zones. The high, the midpoint, and this is all important, right? So even if I put like this, I'm going to show you just for the sake of this. If I put a line in the middle, you can see price chilling here. It's algorithmic, right? So that's how it's going to go there. It's by using this as support, making change of characters, I don't know, finding FVG, respecting every PD array. You can see it's gradually going up. Very slow. There's no selling and buying pressure. If you open your volume bars, you probably see big volume bars on this candle than this candle itself. And you can see the magnitude in difference, right? Now, the why. Why does it want to do it? Because there's all three things the algorithm is looking for, right? It does three things. Swing high, which is, there's people who are shorting from here, where they will trail their stop loss. Where? To here? No, here? No. They put it at a swing high. So they put it here. That's an area key. That's a key area right now. This is also the equilibrium of the range. So it wants to not favor one side. It wants to favor both sides, both sellers and buyers. Both sellers and buyers are happy in this area. Those who want to long, those who want to short are happy in this area, right? Step three. What was the other one? Imbalances. This insufficiency is a magnet for the price to be fixed, right? So it cannot leave these open. It has to fix them, right? This is the narrative. This is where we look to end our trade. All right, so just like that, That was very important thing to say. And now I'm gonna go over how we were able to catch this whole move, or for example, I don't know, yesterday how we were able to take a trade where we did get a session. Sorry, let me go on the 5 minute, and let me remove everything. And so it gets interesting and really fun. So remember we had a session low, session low, Chosh, FEG, but we didn't get an entry. The price never came back to our entry, right? Or this FEG for that instance as well. So if I hold shift, I should be able to copy it, right? We didn't get an entry. So what do we do, guys? What do we do? I was telling this live to everybody in the sweep, and everybody banked on this. Everybody made a really nice trade. I think Jessica made all the way to London. We only took like partials in the middle. She held all the way to the end. So that was very nice. What do we do, guys? Well, let's have a look at this. ES swept low, Chosh, price didn't come back to the FVG, right? Let's go and open the same thing for NQ. Let me just hide everything. Give me a second, guys. All right, where were we? Here. All right. So here we have ES, NQ, and YM, right? These are three indices that work together. Just give me a second. All right. On ES, yesterday, we swept previous session low. On NQ, we didn't. So on NQ, we automatically don't have any entry, right? You can see it's 20, it's the same. On YM, we also swept previous session low, right? Excellent, excellent, excellent. Now, what do you do? Well, since the price didn't come back to the ES, you can come back. What happened on NYM? Put this on, long indicator on. We have the sweep, down, up. We formed a Chosh. Price came back straight to our FEG. On YM, it didn't do it on ES. Very nice. So we can take the trade here. I never trade the YM, but in these instances, you can, right? Because NQ is pumping, ES is pumping, and YM has to do it as the same. So they move in tandems. They should move symmetrically. So you enter in here, put your stop loss either at the low or the nearest swing low. This is a swing low, for example, and you can take all the way up. Does this give you 2 RR? It gives you 2.5 RR, which is great. And boom, you had 0 drawdown. Price came back to the FEG, and boom, rallied all the way up, giving you 72 ticks, 72 times 5. I don't know, that's around, I don't know, $400, something like that. Easy. You had 0 drawdown, really, no stress. I don't care what ES done. Now, this is where the 6 sister strategy come into place. Let's have a look. Pay attention, guys. Here, when ES started pumping, NQ started pumping as well, right? NQ were just chilling. It started pumping. NQ is pumping, ES is pumping, but notice here, what's happening here? YM is dropping down. And then it's just chilling here. NQ are making new highs, high, and ES is making high. But YM is chilling here. It's not doing anything. There's asymmetry in the market. So basically what this means is, this introduces us to the ICT concept called six sister strategy. I have the link in our sweep channel on LuxAlgo. This 6 sister strategy is basically, while NQ is pumping and ES is pumping as well, YM is lagging behind. It's like a 6 sister in the bed. NQ and ES want to go to the club. They're dressed up, all things, and YM, its sister, is just chilling there in bed, very sick. She wants to come too, but she can't. And in the end, so it has to follow it, right? It has to follow through. It has to catch up with its sisters, and that's how we were able to know. So right here is chilling. NQ already made highs all the way up here. Let's have a look. While NQ already at its highs, London highs, and ES was already at almost. Notice this side. The same line is on all charts. While it's also at the highs, almost making the highs, YM didn't literally take even a high. It's chilling in. Its high is here, right? So when did it take its high? When ES and NQ already up their highs. So NQ and ES took its objective while YM didn't. So YM has to catch up and has to catch up very fast. Now, I'm going to be saying 3 things that can give you confluence in here. I'm going to be explaining the silver bullet, I'm going to explain you price and time, and I'm going to explain you the origin strategy, which is Chosh, FEG, and sweep, and I'm going to explain you a breaker block entry, and they all align together. So all of us were over leveraged. I normally take one what you call it, one contract, but we took 3, and we hit the target. If price came back down again, and I took another entry, and again 3 target, and we all banked, and this is how you can do the same. So just give me 1 sec. I have to get my charcoal for much. I'm back. I'm sorry. I overheated them, so they're not usable. You guys owe me charcoal. Anyway, now let's zoom into YM. You see that NQ took its high, YES took its high, but YM is lagging behind, like a 6 sister. As the name implies, the name is self-explanatory. So while we're here, but I'm still sick, sorry guys. So guys, now imagine this strategy didn't happen yet, right? Didn't happen yet. What did we do? NQ took its high, ES took its high, but the YM didn't. So we are right here. We didn't get the FEG yet. We were right here and we all longed. How? Well, let's have a look. We took a sweep. Price went up. What is the time, guys? What is the time? Look at the time. At 10 o'clock. At 10 o'clock, it is silver bullet time. So our drawn liquidity is high. ES and NQ took its drawn liquidity at the highest objective at the top. YM didn't. So this is how you use the narrative. Again, we come back to the narrative. And which FEG do we take in silver bullet, guys? I know I already traded, but yesterday was a good time for those who missed the trade. They were able to get use of the silver bullet alone. So which FEG do we use? Do we use this one in the silver bullet? Because you know, silver bullet is from 10 o'clock. Oops. Oopsie daisy. From 10 o'clock to 11 o'clock, right? And there's thousands of FEGs. There's thousands of FEGs, right? And on the 1 minute, there's many. So which one do we use? We can use this one. It's a narrative. Why this one, guys? Why do we use this one? Well, because YM and NQ took its objective. So the narrative is we're gonna be going up. We have to catch up with the sisters to be in a symmetrical market. That's the how, right? That's the why. The what is it wants to go up. The drawn liquidity. The how is by utilizing the first FEG. So here, smart money will be accumulating as well as high frequency trading. They will be entering at every single FEG, especially this one. We enter here. Imagine we don't have our strategy, guys. So, but you're gonna see how they all align. Like this. You have a chart like this. You can still trade it. This FEG here. I might just remove this because it might be really a bit weird. Price come back to the FEG. You can enter and you can hold it till where? Till YM takes out its objective. Now remember these highs on NQ, they're the same highs almost on NQ and ES and YM. NQ took these highs. NQ took its highs, ES took its highs, YM didn't. So it wants to go to the club again. It wants to go to the club with its sisters, right? So it's running through. It's very fast, very efficient. Boom, down, boom. You missed out this entry. There's no more other entries until it takes its target out and continues even much beyond. So this is like a lagging sister. You can use this approach. Now, why this trade was very nice is because, let's have a look, guys. And if you don't know how to draw breaker blocks, you can use LuxAlgo free indicator, which will be, and they have the better breaker blocks indicator and the premium, which shows you to the precise. This one's a bit not that good, but the premium one is much better. So what do we have here, guys? We have a low. Let me turn this off. We have a low, lower low, higher high. So the highest candle here becomes a breaker block. Boom. What else is there? There is also this FEG. Imagine you missed out this FEG. No problem. That's how we were able to get inside the trade much faster. We didn't wait for the retracement back down. And I'm going to explain that in a minute. I'm going to show you the indicator that is true. We have a breaker block. We have a FEG. So this entry here becomes a unicorn entry. It's the strongest entry in the world. And notice the time. Notice the time, guys. It's in during the silver bullet time. It's during the silver bullet time. So time always precedes price. Price and time is your secret, right? If the time is correct, that means it's good time to take the trade, right? Price and time are aligning. We're aligning with a breakup block. We're aligning with a fair value gap, unicorn entry. We also did our strategy. We also have change of character, which are all one single one of these influences enough. We have all of them in the same place, in the same exact place. So we have a chosh, we have FPG, we have a breaker block, we have time, silver bullet, FPG. We're during the 1 hour this macro, which is the the silver bullet. Price comes back here and then rallies here, zero drawdown. It went straight to the target, London high, and I'm going to show you maybe how far do you think it's going to go? Well, let's have a look. This is the low that was manipulated here, so we can take it from this, for example, put it to the high, extend it out, and it came back to the 2.5. It showed resistance. It didn't go back very down. If it went straight candle like big candle like this, then we most likely come back to the midpoint of the range. We didn't. We continued up. We held it and then pumped up. If we pump up, we most likely go to 4. We came very shy of 4. I think we came back to 3 maybe. Let's have a look. Somewhere around 3. But you can hold positions up to there. It's all algorithmic, okay? So let me just change one of these and put it 3. You can see it came back to 3. Use the support. We came just shy of this. Right? Because remember, we are here. We don't know. We didn't see this thing. I'll go to replay. This here hasn't happened yet. We're projecting what's going to happen in the future. This is the power of what I'm teaching you guys. Indicators, they show you what happened in the market already. Volume, profiles, blah, blah, that people trade. They can be successful with it, but they are showing you what happened in the market. And if you go to any funded firm, if you go on sign up on I don't know, TradingView or anywhere, or any video on YouTube regarding trading, they will always put you a disclaimer saying previous events that happened may not predict the future, right? And that's correct. These indicators, this RSI, MACD, blah 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 blah, volume profile. Oh, there's a high volume node. That's something that happened in the past. Those volume is something that happened yesterday, right? It's no longer here today. But what I'm teaching you is how far the price is going to come in the future. Isn't that power, guys? That's power. Like, if you ask me, that is power. You're predicting what's happening. And if anybody, most people like, oh, we don't anticipate to price, react to price. We don't predict, we react to price. BS, I'm sorry, excuse my French, that's BS. If you open a position here and put a long here, let's say, and put your stop loss here, for example, let me just turn everything off from the thing. Imagine you just go entry here, okay, and put the high, for example, at these highs right there. You are literally predicting, you are literally anticipating that your stop loss not going to get hit, and you're predicting the price is going to go to TUTP, right? It may never do. You're predicting. So whenever they tell you, we don't react to price, we don't predict, we react to price, that's BS. You're doing it here every single time you take into trade. Nobody knows if it's going to hit UTP, right? It might come back one tick shy and go down, right back down, hit your stop loss, right? So we always anticipate, not react to the price. We do not chase price, we react to price. Right here, if I go to the replay, and we're right here, we have our sessions, we have the chosh, we're going to see it, we have the FEG, we're going to take entry in. I want to get out where? I always teach you guys, take out max profit at the road. Oh, sorry. We take always to previous session high, right? So we're targeting like this. This is what it will look like for you in real time. We have super previous session low, chosh, FEG, you're trying to enter at this FEG. No worries, you're anticipating the price. Not going to touch your stop loss. And you're going to take all your profit, maximum profit here, right? But, and this is swing low, so you can put it at the nearest swing low. But, can anybody know how much further it can go? We can anticipate, we can project. We can project, guys. You can put it from here, for example, to here, and you get these lines. You can put it also here. It's only projections. It doesn't have to be too accurate. Come back order here. This here, is it good? Yes, because it's also very similar to these highs. So this area is very, very attractive to the price, right? Is there anything on the left? Nope. So these highs and this standard deviation is two confluences the price want to come back to, right? Let me turn off the 3. So you can project like this. And now the price, once the price comes back down, I'm going to show you in a second, but let's say it means a swing high, right? It made a swing high right there. So now we can take our Fibonacci from the low to here. It's the first, if it says chosh after that, it's the first swing low before the chosh and the first one after the chosh. And now if I get out of replay, you will see that it's actually much more accurate than our original projection. Where was it? Oh my god, 1 second, guys. So where is this? Okay, so here's the chosh. Here's the chosh. The first swing low. Where's the first swing low? This swing low. Where's the first swing high? This swing high. Right? Now we have the data. We didn't have it back here. On replay, you saw we didn't have that data. So we had to use these highs to project likely the possibility, the high probability where it might go. But now we have a swing high and swing low. Well, guys, this is algorithmic. Believe me already. Now we have the accurate. You see, we're a bit shy of it, a little bit higher because we're projecting where it's gonna go. But now we have a swing high. We can use actual data. We are being fed data every single time, so you can hold your position. Oops. To this area, and I told you if we react away from this area, we're gonna come back all the way to the midpoint. So now at this point, you already know we're gonna be looking for shorts really soon, right? If it starts to look, it's respecting. Look at this, respecting it. Look at the bodies all below it. And then it starts to rally all the way down. Now, remember, people who are taking long, they would close the position at the previous session high right here. But let's say you entered here, you had one more runner, okay? One more runner. You close most position here at 2.2 RR. That's 70 ticks. That's on YM. I don't know. Again, that's $400. You might want to where? The next area of target, you can target this one. You see this one standard deviation? You can close a bit more for an extra 7 tick. Or you can hold till 2. And get double 4 now, double what you want, right? So from this move here to here, you could have made the same move from here to here with your runner, right? More money, more blessing. You have your stop loss at break even, and we don't care what happens. If it goes there, great. If it doesn't, no problem. But notice we are not. Notice that more times than it doesn't, it goes there. I just showed you yesterday. I showed you today. It does this every single day, right, guys? It's not just like one time. Oh, we are lucky it happened today. I just proved to you that from here, this swing low, first swing low to first swing high, price came back exactly to the tick right there. Nobody closed over there. And then started rejecting down. How far? Now, here's where it gets very nice. So that was done trade. But so I was telling you guys, so we have, let me delete this. We have sweep, chosh, FVG. That's where the most majority of us joined, but we were able to get entry much earlier, right? So we were entering much earlier. What did we do? Remember, we have a low, lower low, higher high. So the highest candle, let me remove this. The highest candle from here, from this low. This is how we draw breakers. LuxAlgo will do it for you. To this low. What's the highest green candle? This is the highest green candle. This is your breaker block. The price went up. As soon as it closed above it, we enter here and we target the nearest earliest. We were targeting, of course, these highs, the London highs, but we were not able to get there. So we go out here, somewhere on this high. So we scalped a quick long, stop loss at break even. We went 3 contracts. We closed 2, 1 came back. We left 1 running, hoping to go up. It reverses on us, came back to our entry, to our break even. We got stopped out. We took 2 contracts profit, about $300, and then 1 got stopped out at break even, no loss, risk free. But now what happens? Now our original strategy has taken place. So in case we missed the trade, the price came back to our FVG, which is also silver bullet timing, price and time, guys. We have a breaker block, we have chosh, we have FVG, we have a sweep, we have a unicorn entry. Boom. We added another contract here, and I rarely do this, but today we did it live as well, right? So all of us did it. We entered here, stop loss at the low, and now we can be sure that the price wants to go back all the way up. So we put it in London high, and we scalped again to our trade very easily. Very nice. That was beautiful yesterday, right? So now let's continue of what happened later on, because that's what's going to be important for today. So what happened? Remember this 2 to 2.5 area? I'll draw it again. Where's the first swing high of the chosh? Right there. 2 to 2.5 area. We close above it, we go up. We chill here, we don't know. We reject it, we're gonna go down to the equilibrium of the range. What's the range? From this high to this low So you tell me, guys, which high, how, why did you choose this low and this high? Because this is the range. This is the first here. This is the obvious part where the market moved. This is the obvious part where it's rejected, right? I don't care about this. This is zigzag. This here is very obvious, and it's the latest thing. So we expect the price to come back to equilibrium. So you can enter a short here, or for example, wait for an FVG. Once you get displacement down, you can enter here without market structure shift, without change of character. Just you can enter here with a low risk entry or an FVG with a safe entry. You can enter there. Price goes down, and you can aim to take a trade all the way to the midpoint, right? Because we algorithmically, the price wants to do that. You can put your high there, or maybe at the high of the 2.5, and target the something like that, and target the equilibrium, right? But now what happened, guys? It came back straight to here, used it as support, and now, sorry, as resistance, but now it went down much more, very aggressively. So when you see this, normally what happens, right? So we go to 2.5 RR. If we reject, we come back to equilibrium, have support here, accumulate more orders, and then pump all the way up, most likely to 4. I always say this, remember, guys? But what did we do here? We didn't reject. We immediately closed below and even showed even stronger displacement down. So now, guys, okay, we are no longer looking for longs. The market's gonna probably go down. Where is it gonna go down? Well, we don't have anything to project anymore, so we're out of the range now. This is our range. Remember our range? So this becomes our anchor point from the high to the low. And we see, where does the price go to? 2 to 2.5, guys. This is not, I'm not making this up, guys. I just proved to you with 4 different trades. And you might be like, oh, look, why did we use this and this? Why didn't we use this? This is manipulated this high. Why didn't we use this one? Because we're out of the range. You're correct. Normally, as we did, this is a high, for example. We have a high, we manipulated it, and we have a low. So you can put it from this high or this high, it's the same, to this low. And you project that 2 to 2.5 area here. But this here, we went out of this area. We went out of this whole range. So when you get out of the whole range, what do? Now remember, I put from this high to this low, and you called it maybe, look, you're just choosing the best ones, right? Well, let me go on the 15-minute. I always tell you guys, if we get out the range, we always go on a high time frame, like 15-minute, 1 hour, because all this nonsense becomes one single swing low and swing high. We go on the 15-minute. You see any swing highs? No. There's a high, manipulated, there's a swing low. This is the first swing low. You can put it from this high to the low. And it's the exact same thing. You can go down, same thing. Now, again, don't trust me. We go on the 1 hour. High, higher, high, lower, low. This essentially is a breaker, but this here, this candle here, this swing low, swing high. This high manipulated this high, so this is where we anchor our Fibonacci, which is the same that we did on the 5-minute, on the 15-minute, and the 1 hour, and you see it's exactly the same area. It's the same area. Price came back down. What did it do? It showed immediate rejection. Look at this candle. It went all the way down, and then it closed all the way up. This from here to here is a big move, guys. 60-tick move, 60-point move. Price the thing went up. So where do we go, guys? Well, you're right here. You're right here. When everybody in the world is saying that we're gonna go low, much lower. When you see this, you can either react. You can either take a trade, or you can put it from the low to the high. All right, from the low to the high, and the price will come back eventually to the equilibrium, and we'll chill here. Go up, can't cross above it. Again, can't close above it. And now maybe we try to go down, we couldn't. So here is a price where people longing are happy, people shorting are happy, right? When I say people are happy, longers and shorters and longers, I don't mean me and you. I mean people that you don't know. Big money. I'm not saying banks, I'm not saying fund trusts, I'm not saying blah blah blah. I'm saying really specific people that you don't know, you don't hear about them. Okay, the algorithm is made for them, and they're chilling, they're satisfied with this area. They have fair value. Equilibrium is a fair value. Fair value gaps is a fair value. Not for me and you, but for those big people, unmentionable people. Encroachment over and over and over. Exactly, brother. So this is basically equilibrium or consequent encroachment. But price come back here, and now it's chilling here. That's why I'm telling you guys. So imagine you guys would take a trade. Imagine you're like, oh look, you're going over yesterday. I want to take a trade when market open. Well, brother, or sister, what happened in the past 2 hours? Nothing. Went up, down. You just losing money. You think it's gonna go long, it's gonna short on you. You're gonna short, you're gonna go long on you. Because price is at fair area, right? Look at this. up, down, up, down, up, slow, 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 up, slow, 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 slow. So you're gonna get wrecked. Here's where people get wrecked, and here where you recognize, right? Now, where were you able to take a trade? Well, you could have taken a trade today. So, I wanted to say one more thing. All right, guys. So, we came back to 2 to 2.5 area, but where does the price likely to reject or sit down? Remember, back here on yesterday. We're in yesterday. NWOG. NWOG, NWOG, NWOG here, NDOG here. You can see the price came back. The whole big move, it stopped here, it chilled here for like 2-3 hours and then continued down. But I don't care what it does later. I don't care that while we are here, we called it on the, you can go check the chat. They're not being deleted or edited. Right, we're here. I'm telling people we're going to come back and chill at NWG. Right? Very important area. Is the NWG in point in place? Yes, there's also NDOG here. And there's equal lows right here. These all lows here. It's very important. And this NWG is from where? This is from 1712. What's today? 2112. So this is from, I think, last week's. No, this week's. I'm not sure. I think it's this week's. So from Sunday, price went up. Used as support. Went up. Came back down. Chilled here. And now came back up. And now it's chilling again at NWG, which is also the midpoint of the range. We have NWG, so price like to chill in two areas. Equilibrium and NWG is chilling here. Now the market just chills here, and it will wreck everybody that's trying to take a long right now. I'm not just saying on this market, any market. You can do it any market. And now since the ETFs are coming to crypto, it's going to be regulated. So the algorithm, as I know, is a slight increase in accuracy on crypto. Because the algorithm is slowly shifting there because it's in preparation for the ETFs, because then they will be able to put the algorithm on there. So I've seen the same thing that's happened here on crypto, and we called it live and we traded it, and it was very nice. I still recommend you all to trade futures, okay? But you can see the price here is a non-tradable area. Wait for PM session. Remember what I tell you guys, at NWG, everybody's fair. We want to see, does the price want to continue up or down? Once it gives a direction, in the PM session, that direction will be already plotted for you and you will not be missing a move. You can take your trade there. All right. So now we're approaching 10, 10. And people who are like using silver bullet would most likely to take the first FVG from 10 o'clock. Where's 10 o'clock? 10 o'clock. Well, 10 o'clock was the bearish FVG. People took the FVG, that silver bullet there, and they failed, right? Because the price went down. And we took a swing low, price went down. Oh, we're very bearish. We take a FVG here, and now they all got stopped out. Done, right? There's no narrative. What's the narrative? The narrative is we at NWG, we came back, rebalanced to equilibrium, rebalanced to insufficiency, we rebalanced to NWG, we took liquidity. Now we're chilling here, right? We're chilling here. I personally would not like to take a trade right now, but I would be looking more for longs than shorts, or nothing at all, right? Because maybe we would like to come back up a bit more. Up till where, guys? Well, this is new. This is a new thing I'm going to be explaining, which we use it for our entries using the strategy. Remember the strategy? So you have a sweep, chosh, FVG, but there's another FVG. Maybe you can use the sweet spot. Remember the sweet spot? What's the sweet spot called? Let me just remove everything from the screen. So you take an entry here. Remember, guys, from the swing low to the swing high of the chosh. Where's the chosh? This is the chosh. Wait. This is the chosh. Well, let me move this. This is the chosh. This swing high, swing low. We take our Fibonacci from the low to the high. This equilibrium. So this FVG is takeable. You can take this FVG because it's in the equilibrium. But since it's only FVG, you don't have to do this. But what I'm trying to say here is we go open optimal trading entry. Optimal trading entry is somewhere here. Price never came back to it because it doesn't have to. It has one insufficiency to fill, and it did. So here, same thing. If we go back to here and turn off this, don't like too many stuff on my chart. We're at equilibrium, right, guys? Right. Now, we are at equilibrium. We're looking a bit bullish. We have FVGs. So price may want to algorithmically come back to the 0.79 to 0.62 and be content with it. If it really wants to go up, it might come back to this area and chill here. Even the midpoint of that, which is the midpoint of 62 and 75, is 0.75. So you can plot these on your chart, and the price might likely come back to visit this, and visit this. And now we can delete this because there are not zones. These are specific reference points for the price. Price is at equilibrium. If it shows signs you want to go up, it might come back here and then reverse, right? All the way down. Or it might just chill here and then we'll see. So that's why we don't have enough data right now to take a trade for the AM session. For in the PM, which is about maybe, I don't know, 2 hours later, you will have easier trades to take. Now, guys, let me remove everything. Today we did have a short. Let me go on ES. Today we did have a short on ES. And people are asking me, is it a good time to take TP? And I was like, yep. Why? It doesn't, because since we're bullish, it doesn't mean we don't take shorts. We do. What did we do? We set previous session high. Boom. We have Chosh. We're for Chosh. There's no FEG there. There's a Chosh here. Nice. Step 3. There's a FEG here. How many FEGs there is? Not. You always take entry at the first FEG and put the stop loss at the high. And where would you target? You enter somewhere, for example, here, put stop loss at the high. And you target previous session. Now, does it give you 2 RR? Yep, it does. It gives 5 RR. But I closed my position and I told people to close their position. Where? Here, which is the NWG. Price came back to it, respected it, used it as support, and then launched all the way back up. So while I'm bearish, I'm not looking to go all the way down there. I'm like secure partials here. This trade here was very nice. It was around 5 points, which I recommend all of you to be taking these trades. So this was about 4.55 area. So that's about $250 with one contract, 2 contracts, $500, and you should be content with it and you should close the trade, right? We came back here, respected price, went back up one more time. Well, I entered again. This time I bet an entry. I think just below on this small FEG right there. I entered somewhere here. Price went back down. Again, I scalped another 2.5 entry. Put the stop loss at the high. And take the up 5. Where's 5? 5 right there. Price came back there. Got TP'd. And then next candle, it just mooned. Right? It just mooned. We use this as support. Now the market decided that it wants to go long. So it's going to go up, etc., etc. But so this is what I was trying to teach. When price is at equilibrium or NWG, you never take swing trades. This is where the big swing people fail. You never take swing trades. You don't hold positions longer. You only scalp. I scalped 500 down. Again, 500 down. Sorry, 250 down, 250 down. That's 500. I'm done. Easy. It's simple, right? Once we get off, once we boost away, magnify away from the NWG, then you can start taking longer trades. Up till where, for example? Well, till what I said about, till the optimal trading entry. It says entry, but it's actually still a reference point for the algorithm. It's an entry for the algorithm to go short, maybe, but it's a scalp for us to go long, so we can go all the way there. So notice, guys, everybody in the world, after they see this, they pump, green candles, right? They think this is silver, but I'm gonna go long. On the short, I feel okay, I'm gonna go long on the longs. There's the FEG there. They just got stuffed out again, right? Don't want to be trading in this. Now let's have a look at Dixie. What's Dixie doing? Dixie. All right. So Dixie. Dixie had this sell side here. This one we're ready to cut. So during when this we were here, that's where we had the big pump. I was expecting Dixie to take out these lows. It did, and market pumped on ES. But now I have this low here that I want Dixie to take out. It took out this low as well. So it might have a little bit of rejection. We want to see if this fair value gap gets respected. So this is the narrative, guys. Again, this FEG is important. Why? Because we took out liquidity and we have this bearish fair value gap. So we should be looking for longs, but we have a bearish thing here. So is this pump really here just for accumulating of orders to respect this FEG and go back down and take out actual sell side? Or do we go above it, close above it, disrespect it, use it as support to continue up and go up maybe for this high or this high or these equal highs there, which is essentially the highest point, the optimal target right there. Okay? So this FEG is important. This one, no. This one, no, I don't care. This one here is important, right? Or even this one here. But you see, this is how you use which FEGs are important, which one are not. But right now, Dixie looks like it went down. It's very bearish. It might want to come back. Take this size, sell side. This will allow if the indices to pump up, take out their respective highs and blah, blah, blah. But Dixie right now, it's doing nothing. It's showing signs that it wants to respect. It's even still respecting this FEG right here. Still respecting it, look. People think we're pumping. No, we just went back down close. Now, a lot can happen in 1 hour, right? This is a 1 hour candle. This is 1 hour FEG. So, and I'm sorry, I'm on the 5 minute, on the 1 hour. The exact same thing happens on the 5 minute. Price is fractal, guys. Let me delete this here. We took out the sell side. The close FEG is this one. We can just reanimate it. The close FEG is this one. So this one's the important one. We want to see, does price support it or respect it or not, right? Etc. etc. So, yep, people here losing money, going up, going down, going up, going down, going down. You guys in this chat all saved money today, and you get to learn something new. This thing, for example, tomorrow's Friday or PM session. It can happen. The same thing can happen in a PM session, right? Yesterday, this happened in the PM session. We're in the morning. This happened in the PM session. I wanted to explain one more thing. How can you catch these big moves? Big moves, okay? Well, let's have a look. Let's have a look, my friends. We have a high. We have a higher high. Oops. I'm so bad with this, guys. It's the high. The lowest red candle from here to here. Where's the lowest red candle? This one, right? What's this called? Bearish. Price came back down, came back up. This is your last time to take an entry. You gotta take entry right there to the tick. Take entry right there. Right? And then you'll be content with like stop at the high. And target, I don't know, 2RR, whatever, maybe these lows here, which is also London low and AM low. You can take the trade here. Or you can close 90% of your trade here. And what do you do? What do you do, guys? Take the Fibonacci from the high. Whoopsie lazy. We're projecting. We're just projecting from the high to the low. And you can take another partial at where? Let me remove this. You can take another partial at 1 standard deviation and be content with it and be done. 5RR. You can go back all the way till where? NWG. And that's where, oops. What happened? God damn it. You can be content with it. Where were we here? Oh my God, come on, man. 1 second, guys. Huh. And if you're really big-hearted, then you can hold up till the 2 area right here, right? So, which the price was most likely to come back and chill at or reverse. Either way, technically, this is how you can catch the whole move. It is possible, guys. You can do this, right? So, what we'd be looking for? Imagine what we'd be looking for. Oh, price went down. We have an FEG, right? Oops. Just hide everything. You might be looking. Oh, we broke down. We have market structure. So we have a chosh here, FEG here, right? I think everybody in the world was waiting to enter here. I think everybody was probably waiting to enter here and target the lows, the London lows or the New AM session lows. But none of them got entered. None of them got entered. Nobody would enter this FEG. It's too far away. The stop loss would be huge. And I always teach you to enter at the FEG at the chosh or before it. So this chosh, this FEG here, and this FEG here right there. So if I put this on, you should probably see it. There's another FEG there, right? Or you might be waiting to enter at this chosh here. This is also a chosh. This is a swing chosh. This is an internal chosh. Price never came back today, but you are already in the trade because of this breaker block. And this breaker block will be drawn to you with the LuxAlgo. Since it's back in time, it's going to be deleted, but breaker block LuxAlgo will be drawn out for you. You can catch this whole move, guys. Right? And no problem. I didn't take the trade. I was just telling people where it's going to go. And it feels good. Like, you know where it's going to go. You know what's going to happen. You know that there's an entry there. You just don't take it. You just tape reading. So next time it happens, you can take action on it. First went back down. Now it's back at the equilibrium. You can scalp the long or hold the long. Sorry, the short and then the long. And now here you're content. Right? So now, what's this? Retail will think this is, oh, equal highs. Sorry, not equal highs. Oh, we made McDonald's sign, right? Or, well, I think equal highs or McDonald's sign, not equal highs, guys. What's it called? Equal tops, double tops, something like that. So they're going to be like, oh, we're going to go going short, maybe, but the algorithm doesn't work on that, right? Right now, everything is favoring what? We're at support. We came back to equilibrium. We do have bearish FEGs here, so maybe the price, like I said, came back to equilibrium to continue going down or going back to the optimum trading area to going back down. But you don't want to be guessing here. You just come back in the previous in the PM session and check what did the price do. Did it come back to the area here, the 0.62 to like that optimal trading entry, and then start spacing down? Then we can go look for shorts. Does it pump up and then despise them and then just continue going up? Then we most likely go back to these highs. Does it stay the same? Then you just don't touch it. All right. So this is market. The trading is just about longevity, guys. When you recognize this, I didn't take a trade, but I'm not sad. Next time that happens, I'll act on it, right? So here, didn't act on here. We did act on here. Here we didn't do anything. So, yeah, that was my 2 cents for today. And I'm going to be trying to introducing new concept every single time I go live. So today was 6 sister trade, 6 sister strategy. It's very nice. It's very nice, right? Look today, for example. Today, open this, close these. So what happened here, guys? Oops. Well, ES pumped. Sorry, ES pumped. YM pumped. NQ pumped. They're in symmetry. Okay, there's no 6 sister here. But notice what happened, guys, here. All right, here's something nice. NQ took it slow. This is the SMT. This is SMT divergence. What did YM do? YM made a higher high. While ES also made a higher high. Now, guys, listen to me very carefully. We have SMT, which means smart money tool or smart money technique. It's a sort of divergence between the indices. It's not based on RSI, BS stuff. It's based on 3 indices. This here is tipping us, the algorithm is tipping its toes that it might want to reverse very soon to the upside. So here, we have these made higher highs, these one did not. Right? So we might be tipping our toes to go higher. We are also at NWOG. We are also at NWG, I think, on most of them. What's this one? I think NDOG. No, this is the NWG as well. We're near NWG. So market might want to start looking to go higher, right? This is indication for you that the price, this is early signal. It doesn't mean you take an entry on it. It just means that, okay, I want to go long. Do I have anything else, other factors that factor in my favor? Yeah, we have the NWG, we have a divergence, SMT divergence. We are at the equilibrium, so the market is satisfied with the current move. Now it might want to check for a new move. This move can be a long or short, but it favors our side. While most people are favoring the double top, we're favoring this, right? But we want to see. So this here is also an order block. This here is an order block. This is the midpoint of it. I want to see that being respected. Same thing here. This here is an order block. Are we respecting it? Let me zoom in, guys. We came back to here. This is not a random area. This is the midpoint of this order block. This is the mean threshold of this order block, guys. All right, so we want to see if we respect this, then we can go up. If we close below it, then most likely we can come back to this low and go back all the way to this low. But we also look at Dixie. What's Dixie doing? Dixie is still struggling to break out through this high, but it's making higher highs. And yeah, so we want to see how this happens. If this we start rejecting down, we're most likely gonna have the final thing for us to continue going up. If Dixie starts to pump up, then okay, most likely we're gonna break through this order block and go back down. And it makes sense with the original narrative or the original plan, right? So we go from the high to the low, midpoint is equilibrium. We go back to the equilibrium, accumulate more short orders to continue going down. Maybe it might just jump a little bit into the optimal trading entry to allow some people in the world, which we, you, me, you don't know, they will accumulate orders there for them, not for me and you, to go back all the way down, right? Until where? Like, I don't know. I don't even care at that moment, right? So this is here is what we're looking for, right? So here is, and if you can't put a hand on it, like in trading, there's no 50-50, okay? There's no 50-50. I'm favoring, for example, let's say I'm favoring shorts, okay? If shorts happen, I will act on it. If I see longs happening, then it doesn't mean, okay, oh, we're in the other 50%, so now we go long. No, it's not 50-50. It's how can I say that? It's not 50-50. If the other happen, I will sit on my hand. I won't take the trade, right? So it's not literally 50-50. It's if it favors my position, I will go for it. If it doesn't favor my position, I will just sit here and wait for the PM session. Now, in the PM session, what do we do? In the PM session, you open the PM session at 1:30, okay? I want you to check your charts at 1:45 PM, okay? Check at 1:45 PM, New York time. Open your charts there. You go up till 2:30 to see a setup. If you don't see a setup, then close your chart for the day, okay? I wouldn't even check the power hour, right? The last hour, which is 3 PM, 3 PM to 4 PM, right? But if I see something there, then I can stay trading and maybe even trade the power hour as well, right? So that's what we will do. So this way, you don't keep waiting for the chart. Okay, what are we doing now? The price might just keep doing this for like hours, all your day, and you might not even take a trade. And then this will force you to take a trade because you just wasted 6 hours of your day and you didn't take a trade. So you're gonna be like, okay, now we're finally bouncing. I'm gonna take a long, and you're gonna lose it, right? Now we just check. Now the objective of the morning is done. Come back at 1:45 in 2 hours, exactly 2 hours, no, 3 hours, I think. Go with your family, whatever. At 1:45, check. Okay, nice. I like what I'm seeing. We start previous session high. We have a chush. We're starting to get momentum and displacement down. Okay, I'm favoring the shorts, and it's overall with my overall bias, right? Or nothing happened there. Then you wait. You will only be looking at the chart from 1:45 to 2:30. So literally around 30-45 minutes, nothing happened, and then you close the chart. You just save yourself time. You just saved your marriage or your time with your girlfriend, or just going to the cinema, or just chilling like me, smoking some shisha, etc., etc. Right? So this here will help you stay long. And believe me, if there's a trade, it's gonna happen here, right? And you're gonna spend. You can watch the chart until the closing hour, and you will see that you're just gonna be like, wasted my time. Damn it, now I'm gonna take a trade just because I wasted my time, right? People validate themselves by taking a trade. They want to end the week green, right? So people like girls, for example, they go on TikToks, they make videos, they validate themselves with people giving them likes, comments, blah blah blah. We as traders, we validate ourselves by ending the week or ending the day green, right? It happens to be still. It's nothing you can avoid, but you can recognize it so you don't happen. Your job is to recognize it. Your job is not to not do it or not do it or do it. Your job is to recognize, okay, I'm in a shitty position. I'm gonna be content with it because I could come back tomorrow, and we have 4 sessions, 1, 2, 3, 4, which is being printed soon. If I miss this one, I'm gonna take this one. If I miss this one, I'm gonna take this one. If I miss this one, I'm gonna take this one. And it goes both for longs and shorts. So optimally, we have 8 opportunities a day. That's way more than what we should be looking for, right? But it's always gonna come, and that's only one day. So that's a bit of psychology from Luke. And yeah, I think if you guys have questions, please write down. Otherwise, notice. So while I was explaining everything here, people trying to long and short, they're just stuck in this range for like 4 hours now, right? Oops. from the market open here, almost 3 hours, right? 3 hours, and they're just not doing nothing, right? Look at this pump. This will make everybody go long. Look at this dump. It's make everybody go long. It's short. Look at this pump. It's gonna make everybody go long. We predicted that. How good is it to feel that you know what's gonna happen, even though you don't own the algorithm, you know nothing about it. You're not been trading for 10 years, right? You see everybody telling you, oh, I've been trading for 6 years, but I'm only profited in the last 1 or 2 years. That's because they've been watching ICT, right? The other years, they don't count it. Don't count how many years you're watching the charts. You can be profitable in 3 to 6 months or 1 month if you just finished all ICT, not binge watch it and learn it and apply it. You can be as proficient as someone who's been trading for 10 years and even better than them, right? Don't get put off by that stuff. For example, the six sister strategy, right? I know it for a really long time, but I think a few days ago, I just went over it. I went not over it. I came across that video and I watched it. And yesterday we applied it. It came in handy. It doesn't mean I'm gonna look for it every day. It's just I'm gonna look for it. If I don't get my entry, I'm gonna look for what else I can do. Oh, there's no FEG. Okay, I got a breaker. I'm gonna get entered on the breaker. Oh, there's no breaker. I'm gonna enter the FEG. Oh, there's no FEG. Well, we have the silver bullet. There's no silver bullet. Okay, we have order block. There's no order block. Okay, we have the six sister. The YM is lagging behind its sisters. So I'm gonna try to force myself on that chart. These concepts are not for you to take every single time. It's just for you to find you can stick to one. But essentially, these are just at your disposal because they happen every day. It's not one single time. Could you review NQD? What's NQD, brother? What time do you start preparing for the AM session? Savvy, what time do you start preparing for AM session? Well, in the AM session. Well, not technically. Basically, if we get a sweep of any of the session, the highs or the lows, I'll get alerted and I will be watching the chart to trade. So I'm not waiting like most people at the market open or the power up, right? Most people that you see on the internet that give you live streams and stuff like that for the druids and they take live trades, these people can only trade at the market open or power hour. That's one, right? And there's a lot of volatility there that will kill a lot of users. So that's 2. 3, they are forced to give in to their people. People are paying them to watch them, right? So they're forced themselves into a trade. Oh, we got an FEG. Okay, I think this might be last time I'm gonna take a trade. Last chance I'll be able to get a trade. So they're gonna force a trade, and this is gonna make you and them lose money. They won't care because they're getting paid from you views, from the subscriptions, but you care because you're wasting your accounts, right? And they're getting paid from you and losing the account. They can make a new one. They can make 100 more new ones, and they wouldn't care. It's only 10 subscribers made them the past day or something, right? So they're forced to take a trade. We are not forced to take a trade. I'm doing my analysis. It took me 5 minutes, right? Basically, you get an alert, London high, swept. We wait for a charge, FEG, we enter, we go short to the NWG. You can hold maybe to London low, blah, 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 right? If that's what we want to look. You got a long on YM. You got a short, you got a sweep of previous session low. We have a high, charge, FEG, enter the FEG, and you target previous session high. That's your maximum target. It's easy. It's all planned. It takes 30 seconds to get almost 3,000 hours worth of ICT or like experience in there. And I'm still learning. You should be still learning. And just open one video of ICT every day and learn it. Like in 30 days, you probably do 30 days, 30 videos. There's 40 videos for the 22 mentorship. So in 40 days, you'll be able to know everything you want for trading. If you want to do the extra step, you can go on different, for example, the 23 or like the core contents, but that is enough. So why do you wait for 1 to 45 instead of the macro times? My brother, basically macros are times of the market where there will be injection of liquidity to hunt liquidity, okay? Highs or lows. For example, this macro here, we have low and we have a low. We have an FEG. Market came back. It done 2 of these things. It done 2 of its things. What did it do? It took out liquidity, equal lows, relative equal lows. It also rebalanced to an equilibrium. Sorry, it also came back to FEG, which is rebalancing insufficiencies, bad imbalances. That's the job of the macro. And let's see if it did one more thing, and that is come back to equilibrium. Guys, I'm not making this up. This happens even like it's happening now. It's not wasting on a day. Right here. I told you at the start of this stream, market likes to hunt liquidity, rebalance insufficiencies, this one FEG here and this one here, and go back to equilibrium. So right now we're at equilibrium. Notice this, of this small range right here. The algorithm the macro, its job is to do that. Now, if you're in a long, you want the macro to support you. So if you're long, you would expect the price to come back, take this liquidity, and then pump us up and continue up, right? That would be your job. This macro went down, took out this low, came back to this FEG, midpoint of this FEG, a little bit down, come back to this order block. This is an order block. These two are order block, both of them. This one's too small, so we can use both of them. This is an order block. What's the midpoint of that, guys? Let's have a look. I'm not making this up. There you go, guys. See, we're respecting this. Look at this body. The wicks can go a little bit down, because if it does every single time at the tick to the tick, then it will be in books. I'll repeat that every time. It goes a bit down more to make it a little bit jagged, so people don't notice it. Like every single time it comes back to the midpoint of FEG or midpoint of this, so it just goes a bit down. But you can see the next time they didn't care because this one will hide this one, so you can see this one to the tick, and then price went back up. Right, so you can take your long here, right? You can take a long here and then whoop and aim for, I don't know. You can see, right? End up price coming to the order block with an FEG to support prices and NWG. You can scalp bugger. This is a scalpels market. This is literally a scalpels market. You can scalp a long, come back down, scalp another long, come back down. Doesn't have to come back to the NWG right now because there's an order block that can support price. This order block has narrative. Why? Because this order block is strong because it formed an FEG. This candle also took out liquidity and it made us run this whole thing. So the narrative is this order block has the interest of smart money people. So once the price comes back down to it, the algorithm will force the price back to it actually. And you can see in the macro, it forced back onto the order block to accumulate orders to get another batch of the smart money's bags, long position, to accumulate more orders to go long again and be content with it. Done, right? So it went down, went back up, took out the highs. Where did this go back to? Okay, let's have a look. You guys are seeing this live. I'm not just going in hindsight. I'm showing you everything I said yesterday. I explained today in the video hindsight, but yesterday I explained it live. I'm explaining it again. Where do you think the price rejected here? Let's have a look. Oopsie, where is it? Okay. What's this, guys? You can take your target to this high. Where's your next? Once you're here, you're looking to TP here. How long further can you hold? To wicks. These wicks are area of reference. These are the wicks. The midpoint of the wicks are as strong as an order block, as strong as a breaker block, as strong as a fair value gap, as strong as a bloody. I'm running out of words. Things. It's a key reference area for the algorithm. Okay, price comes back here. You can enter a short here and go back down. Right? Because the algorithm likes to stay next to the NWG, so the price is chilling here until it decides where to go. But this here is there, right? So once the price comes back here, what can you do? Let's have the FEG so we can see on the 1 minute. We go on the 1 minute. You can see it's respecting it. So here, once you see displacement down, then you can look for shorts, right? For example, price went down, went up into this FEG, and then went down a bit more, take out this high, and you can be aiming for this low, right? These equal lows, you can be entering from this high to this low. Where's the equilibrium? This is equilibrium. So this FEG is an entry you can take. Not this one, maybe this one, but this one right here. You can take an entry exactly somewhere here. You can see, come back to the 50%. You can take an entry here. Here, look at these candles. They're all at the 50%. Again, 50%, 50%, 50%, 50%, 50%. This is on 1 minute, guys. It's this prices fractal. So you can take a short here and aim for these equal lows. We just engineered liquidity, and you can just be consent with it, right? But I wasn't looking for short here. You can only look short once we respect. Remember the midpoint of this FEG? We hit this wick. We hit it, and that's not enough. Just hitting it doesn't mean anything. If it hits it, I'm not going short. Next candle, nothing. Third candle, we had a big displacement down. This is your sign that okay, we are looking for shorts. I'm not looking to enter right now. I'm looking for my entry. What's your entry? FEG, for example. Order block, breaker block, blah, blah, blah. Here we have an FEG. Price went down, went back up. You take entry at this FEG. Not this FEG, not this FEG. Well, you can take at this FEG, but the closest one to you, above the 50% is allowed. So you can enter right there. And you have literally zero drawdown, by the way. You can put your stop loss here and just scalp it. But again, let's have one more thing. All right, we didn't get that. So Why do you wait for 145 to 230? Okay, that'll explain the macro thing. And notice how the price is going down, right? That why 145 to 250 to 230? Because why? Well, ICT said so, but I really don't know. But I think it's because lunchtime we don't trade in the lunchtime, and at 1:45 is 15-minute. The macro, sorry, not the macro. The algorithm starts working at lunchtime, ends at 1:30. So 1:30 can do a lot of things. So in 15 minutes later, it will be clearer, and then you'll be at the chart for 45 minutes, right? If nothing happens, then 2:40, 2:30, it'll be 30 minutes later until power hour, right? So if nothing happened between that period of time, then probably nothing's going to happen in power hour, right? But if something's happening, if we're getting a move or something like that, then it's probably going to continue into power hour. So you don't, it's just his 30 years of experience is passing it on to us, and we just continuing it with it. But that's my best explanation for it. I hope someone recording this. I'll explain a lot of stuff. Merry Christmas, guys, by the way. So what do you think this is, guys? You can start planning ahead. This is a low. This is a lower low. From this low to this low. So the highest green candle becomes a breaker block. So this becomes a breaker block. So we expect the price to chill, to respect this if you want to go long. Well, it's not. It's closing below it. This is a low. This is a low. This is a high. This is a high. No, it's the equal highs. But yeah. This here. This is a low. This is a lower low. The highest green candle is a breaker block. It's very small, but it's a bloody breaker block. Let's have a look. Price came back up, came back down, respected it, take another pump. Well, what did I say also? This is an order block. Breaker block, order block, FEG, close to the NWOG, everything supporting longs. You can take banging trade right here. So once the price come back here, we disrespect this breaker, then we'll see if we respect the midpoint of the order block. If so, we most likely come back to take out these lows, because now we have an accumulation of low, 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 and NWG. So it's attracting price. You can see it's just bringing it like I'm bugging. Like, come to me, baby. So, see, guys, from the market open, nothing happened. Like, it's good that you're spending time with me because you're learning some stuff and not wasting your time trying to just force yourself into a trade. This here is an order block, remember? Notice how price respecting it to the tick. This is 5-minute candles, not 1 minute. Again, we want to see if this breaks, then from this point, we'll be most likely know that this order block is going to be broken, this breaker block is going to be broken, and we're going to go for these lows. While we are here, this is strength, guys, right? If we respect this, then this order block and this breaker block are good to go. How do we know if it's still strong? I mean, how do we know if it's still like respecting it? I don't care about the wicks. The wicks can go all the way down into this order block, can go all the way down to this breaker block. You can allow it to. You can allow it to. But the price, the candle class, the candle body must not close below the midpoint of this here. If it closes below this with a body, we most likely come back and revisit these areas. Alright, so guys and girls, I hope someone recorded this. I'm done. If you have questions, please write in the chat. The chat is pro streams. You can just click on the right thing and you can see what's going on. But yeah, you saw everything we said to the tick. We did it in live. We did this one again in live. It's power to know what's going to happen in the future, right? Now, next time you see it, you can act on it. You can anticipate such move and you can act on it. All right, so if no questions, I'm going to end the stream here because I miss my shisha. All right, guys, I'll see you later then. No questions so far. All right, I'll see you guys later. Have a good day. See you.